This is your LMAX exchange technical update for Tuesday, September 6, 2016. Euro dollar. So the euro remains under pressure below the 100-day moving average, and it looks like the market could be poised for the next major downside extension eventually towards key medium-term support at 109.12. At this point, look for the market to hold below the 100-day moving average on a daily close basis, while ultimately only a break back above that high that we saw on the 18th of August at 1367 would delay, but not even negate the downtrend. Sterling dollar. Cable has been locked in a bearish consolidation over the past few months, and the market is holding below some critical range resistance at 35.33. While it holds below there is risk for another topside failure and eventual breakdown below the recent plus 30-year low from July around 128 and towards 125. At this point, again, only back above 135.33 would compromise or threaten this bearish structure. Dollar yen. Dollar yen looks like it's in the process of looking for that next lower top ahead of a resumption of the underlying downtrend. So long as the market holds below 107.49, the market remains bearish, and there is risk for a deeper setback below the recent 2016 and multi-month low at 98.99 and down towards 95. Euro Swiss. Euro Swiss saw some recent trade to the top side, but the market overall remains confined to a range between 108 and 110. And while the market holds between that range, selling rallies and buying dips is the preferred strategy. Most recently, we stalled out towards 110 or at 110, and we should see setbacks over the coming sessions back towards the range lows. Again, only a break and close back above 110 or below 108 would be required for clear directional insight. Aussie dollar. So Aussie has seen some bids in recent trade, but overall the market remains very well offered, with the market expected to once again find a cap ahead of the next major downside extension towards key support at 74.21, which guards against more critical support at 71.45 further down. At this point, only back above 77.58 would compromise this bearish outlook. Dollar CAD. So dollar CAD appears to be in the process of carving a meaningful base, with any setbacks seen very well supported and higher lows setting up ahead of the next major upside extension beyond 32.54 and towards the 135 to 140 area. Ultimately, only back below 26.55 would really compromise this outlook. Kiwi dollar. So Kiwi has traded up recently to fresh 2016 highs, is consolidating just off those highs, but the market is showing signs of exhaustion above 73, and there is risk for a more significant decline. Look for a break below 72.04, that low from the 30th of August, to strengthen this outlook and accelerate declines. SPX 500. So the S&P 500 is consolidating off its recent record high just shy of 2,200, but at this point the market will need to break below 2147 to strengthen the possibility for some form of a top and accelerate declines. Until then, any setbacks are classified as short-term corrective ahead of what should be the next major upside extension beyond the record highs. Again, there is the possibility that the market is looking to top out, but we would need to see a break below 2147 to confirm. Gold. So gold continues to be very well supported on dips, with the market on this most recent dip stalling just shy of the 100-day moving average ahead of what should be the next major upside extension towards and above that 2016 peak at 1375, which will expose the 1450 to 1500 area. At this point, only a close back below the 100-day moving average would compromise the constructive outlook for gold.